Here we go, guys. Wednesday, July 28th. We're going to take a look at the stock market, some of the major performers out there: Dow Jones, S&P 500, NASDAQ, and dollar, etc., etc. Right now, we're looking at the daily chart. Everything's closed, of course, and huge sideways consolidation zone we see here. So at some point in time, we're going to bounce real hard to the upside or crash real hard down through the bottom of this thing. And kind of as a loose rule of thumb, however long these consolidation zones are, like I said, it's just a real loose rule of thumb. You'll get a downdraft in that same length, or an updraft if a potential breakouts. So not sure. I don't know. My money probably on the down on the downside here, unfortunately. But at the same time, if you look at the weekly here on the Dow Jones, of course, back in 2020, March, the COVID deal, really slammed everything. So that was kind of a black swan or anomaly that came out, but as a rule of thumb, we've been, without a major breakdown, we've been coming down, holding the 200, that purple line, really since 2011 here. Hit it a few times, and then, of course, the COVID deal, we definitely broke through and came down almost in perfect sync to the high. Previous high here in 2015, and got a little over it. Sideways consolidation 2016, and then bounced right up, from there. So looking for that to, possibly happen again. We would come down to this pivot high here, but really think we come down and hit the 200, with any major correction that we have coming. But we don't want to get too far ahead of ourselves. We, want to keep, watching this, and when we start seeing, continued cracks in the dam, we'll, come in and talk about it at that point in time. I just saw something. I want to make sure I had a better, a newer trend line here, and well, that's not going to work. Let's see, we can come up from the bottom here. Maybe something like, I'm trying to see what all I can pull in here to make it more valid and reliable. Yeah, probably something through here. Catch this little gap up. In here, we pulled under it, came up, hit a little bit of resistance, gapped up, retest. And then here we are. So we'll see if that's going to have any hold for us if we come down here after breaking down. But we can't even talk about that until we see some more weakness in the market. Right now, only thing you see technically here, it just if I can pull that in there so you can see it, is high, higher high, and higher high. Okay, as small as they may be, but still higher highs, and retesting the previous all-time high from May 10th. And that red dash line still undefeated regarding resistance for us on the Dow anyway. And real quick, Dow Transport is generally an indicator of potential weakness coming in the market. And as you can see, a lot of lower lows here. We never have come back up and tested that high, all-time high again from May 10th. It's just been kind of a downtrend the whole way. So again, if we break here, 200's guaranteed hit, and then this little low pivot there, and then actually it'll be right in here. That's the target. Should we lose pretty much where we are now and come down, might need another test to the 20, pull back up here, then come on in. And that might trigger it for the markets too. Then the S&P 500, you can see an uptrend in this wedge formation, ascending wedge, and 100% of the time, getting this out of sync. We have a breakdown. As you can see, we had one here. The next day, man, they rallied it back up into the wedge and over the 20. Then here it took them a little bit longer. Definitely rotated the next day, closed right on the 20, which is very, very important. And then, here we are now. So we'll see if they try to, bump it up again, up and over this upper resistance line. We've already hit it a few times, so who knows? That would be pretty amazing if they do in this economy, with some other indicators, all pointing down, so to speak. And then the Nasdaq's one of the first to run, as far as speed and power. And as you can see, we're still consolidating in this upper zone, still above the 20s, still above this little high-low pivot area. Blue dash line's our support if needed. If we lose the 20 and come down here, that's kind of the last hope. And then probably retest this uptrend line. That breaks 100%. We come down that 200. And then the IWM, kind of the same deal, showing a lot of more weakness than stability here. This line was, reliable and valid. We broke it, but came back up on it, tested it again, and then already came down to this low pivot right about even with the 200. But that was, a number of days ago, and the 200 was under there, but we didn't quite clip it. And then the Qs. Let's see, we had this uptrend line here, 2 touches. We never got above the next trend line, so we're making kind of lower, putting this channel, making it smaller and smaller. This price channel, it was pretty spread out. The highs and the lows bouncing between the two, and then we narrowed it in. So we might be, looking to get yet smaller and smaller until we're back on this trend line, maybe even blow through it. But this previous resistance is now support near term anyway. So we'll see if that holds up. But still, high, low, high. So still working the the W formation. Now this is interesting. The dollar. 3 days in a row to the downside. Red candles had this ascending wedge, broke down under the 20 and our blue long-term trend line that goes back to September of 2020. Came up here, kind of a little double top area where we peaked out. Tried to come back in, couldn't do it. So the dollar definitely showing a little weakness here, and each day we close, that's kind of a confirmation. I don't know if they'll try to run it back up and retest, but 2 days under here. Now we still got an hour to go before it closes technically, but you know what I'm saying. The next one is this little pivot here. As far as near-term support, where the dollar may come down, and hold a little pivot area here. And bounce. I'm trying to see if there's any other protection for it near term. Let me pop up fib line and see where the 0.5 is. Oh wow, right there at the 200. So let me get a line down here, and I'll make that to 50. And reason for that, if we take out 50% of this major uptrend here, like the 200, we should bounce from there, and it might be just come down, bounce, hit. We could do something like this and retest all that, but if the dollar is that weak, it won't be much of a bounce. We'll roll back under it, test it. So basically, we'll come down, hit this area, come back up, and then roll through. And it'll be, more of a M shape than a W. But let's keep going. The metals, gold right here, still under our long-term downtrend line, number 1. Number 2, under the 200, which is pretty bearish. Number 3, right there at the 20, the red line, need to get back up and over it. And this high pivot here, high pivot there, resistance, broke through melted through, couldn't get over for a while. Even this green candle closed under it, then got over it. Now we're testing it again. We get back under there, we could come down, or we will come down into this sideways consolidation zone, and maybe that'll hold. Actually be lower, right about in here, and maybe that'll hold, price stability for a little bit, until we can build again a base, a floor, and then try to run up back up to that 1700, 1800 area. Silver, yeah, again, it's always consolidation, and then we broke down, so we're still expecting a little bit more downside, maybe to the, see, we're holding this low pivot here, and this was done like weeks ago, but sideways consolidation over here, support, wicked into it there, came down, several weeks later or months later, wicked into it again, and then this up price channel, sideways consolidation out of it, and then broke down, consolidation, broke down. So we'll see. Even with the dollar being weaker, you would think gold and silver would have been a little stronger. Another economic indicator is copper, and they did a little run up lately, as you can see, 3, 4, 5 days, and then it gapped down and closed yesterday, today red. If we lose this high pivot support, the blue dash line, of course, will come down, retest that 20, and then we'll see what's in the cars. But fantastic job on copper. If you were able to catch it, early part at 20, you did very well for yourself. And then let's just look at one of the SPY. It's basically just the ETF for the S&P 500. And same deal, flirting with the still all-time highs above the 20. Looking great, really, until we break first line in the sands, that little high pivot here, blue dash line, second line in the sands at 20. Maybe the last line in the sand will be this uptrend line, but we've been bouncing off of it. But each time we hit it, it gets, it's going to get weaker, but same with the upper one. It gets weaker, then price could get up, come back, retest it, and keep going. And it, like I said, it follows S&P 500. So where the S&P goes, the SPY will as well. But until we break this, retest it, and fail to get back up there, that would be the sign that, hey, we're coming to the 200, and even coming down to 200. Let me make sure that's percentage. Yeah, let's say we break it in here. Of course, the 200 is going to be coming up, to it over that time. So we're looking at around 7 to 8% drop. That's kind of a big deal. Not really a big deal in cryptos, but it's a big deal, in the stock market losing that much. Because back here, from this high, let's say, to this low was 8. And that was a shocker. And then back here in, September 20, if you remember that, that was 10. And we still didn't even hit the 20. The 200 crashed through the 20. See how we retested it? Matter of fact, I'm glad that's there. See, we came down, came back up to it, down twice, really. 1, 2, gap down, then here we go. And then we made, and how you knew we were off to the races is that we made a low here and then a higher low there. Okay, that's what you got to look for. Those kind of the little Easter eggs that you got to find in the grass. Then when we took out that red candle here, that was the candle to get in here, and then the rest is history. So, but okay, guys, thanks for hanging in there, watching this long video. Thank you so much for being members, and we will see you on the charts.